From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming April 11th Forex session. The Euro US dollar is in front of you, and as you can see, the candle from the Wednesday session was an attempted breakout above the 131 level. And the 131 level is a level I've been talking about lately, mainly because of this candle. This candle formed, and then at the open, we had a nice gap down. There's been precedence for this to be support and resistance previously. So that being said, it appeared that 131, whether it's major or not, may be up for interpretation and debate, but it seemed like it was a fairly interesting level. We've now formed a shooting star, which, as most of you will know, is a rather bearish sign. Adding to my interest in this candle is the fact that if you draw a Fibonacci retracement, you can see that the 38 is just about where we stalled out, the 38.2% Fibonacci ratio. So, with that being said, there are a couple different reasons to be bearish. The interesting thing about this is the 50-day exponential moving average was something that I talked about just yesterday, that we closed above, and it was bullish. But I did say and would point out that this level here was the next hurdle to get over before we could really kind of take off, and we failed. So saying that, the next question is, where do we go from here? For me, a breakdown below this candle will run into some trouble here, but if we pick up any downward momentum, we could pick up a handle or two to the downside. Whether or not this pair breaks down, that might be a different story. But really, one question you have to ask yourself is, what exactly did Europe do to fix the mess of problems they have? Yes, they put a couple band-aids on Cyprus, but quite frankly, there are much larger problems in Europe, and we still haven't worked our way through them. How the euro survives is really a testament to what the Federal Reserve's doing, quite frankly. If it weren't for the Federal Reserve and its endless quantitative easing, it's hard to tell where the euro would be. Probably about 0.50 at this rate. But having said that, I do recognize that this is an area of resistance and down here is an area of support. So I think basically what we're getting ready to do is maybe carve out a little bit of a range. If we break down below, I would suggest that maybe we'll go down to about 128 with a little bit of luck, but I don't really see a whole lot more in it than that. But there's nothing wrong with a good old-fashioned range play. Alternately, though, if we do not get that and we break the top of this candle, that's a very bullish sign, and we would probably clear the way to about 133 or so, maybe 132.50, as that is the next resistance band.